Hey everybody, I just want to introduce you to Marty Davenport with FCM Mortgage here in Nashville, and I'm just going to talk to him about mortgages and what is a mortgage and how do you get one and how expensive are they. So thank you for joining me.
That's a big question. That's a big question. Glad to be here. So what is a mortgage? Well, mortgage is just the financial tool you use to buy a house, to buy residential real estate. So, and there's a bunch of different types, but that's the basics, is just what you use to buy a home.
Because nobody's saving up to buy a house all in cash. Most people are not.
No. Really, when you look at how quickly homes are going up in value, of course, we had a couple of years where they were surging over 20% year on year. This year, we're on pace for a 7% appreciation rate nationwide. You really can't, most people cannot save fast enough to buy a home with cash. Even buying or saving for a huge down payment, most people don't have the ability to do it as fast as homes are going up in value.
So how much money do you need to save in order to get a mortgage?
It's another big question. There's a prevailing myth. I think something like 30% of Americans believe you need 20% down to buy a house. But actually, there are zero down options. There are loans that there is a down payment, but the down payment is provided by a grant or a state agency. There are homes with very low down payments, 3%, 3.5%, 5%. So there's opportunities to buy a house with actually very little out of pocket if you qualify for the loan program.
Qualify? So what does qualify mean?
So the three barriers of entry in buying a home is going to be income. You have to have enough income. That's fairly basic if someone's a W-2 employee, but if somebody is self-employed, it can be more complex because our tax law on what you can write off doesn't dovetail very well with how mortgage income is calculated. But if someone has we'll say a normal job, it's just their income. So you have to have enough income to qualify. And then you have to have sufficient credit for the loan program. We do like an FHA loan as low as a 580 credit score. Tennessee's first time buyer loan, THDA, requires a 640 credit score. So it just depends on the loan program. So credit is a barrier of entry, and then the funds needed. So if you don't qualify for down payment assistance, or you don't qualify for a loan program with no down payment, like a VA loan is 100% financing, a USDA loan for rural homes is 100% financing, then you have to have the down payment. But we can get pretty creative with how you get the down payment. So most loan programs allow a gift, so family can help you buy a home. You can borrow against secured funds like a 401k, a 401k loan from your retirement account. So there's ways of coming up with a down payment. And I would say the largest barrier of entry for most people is the down payment requirement. If say in a high cost area where it's just the cost of living is high, rent's high, and so Americans are able to pay their rent month after month after month, but being able to afford to save additional to put money down can be an issue. So if they make too much money to qualify for down payment assistance, that can be a problem. And I think that's something that the mortgage world, which includes the federal government, needs to solve. If you can pay a $2,000 rental payment month after month after month, you should be able to buy a house. And if the down payment is a barrier, there should be assistance for that, even if you do have high income or higher income.
And I would imagine if you don't know if you would qualify for a mortgage, you have a few thousand saved up, your credit score isn't the best, but we could, they could come to me or you and schedule an appointment, and then we'd be able to walk them through what they would need to do in order to qualify for a mortgage.
Absolutely. It's really a very simple and not a scary process. Most of the time we do our initial application over the phone or through online application. It's like filling out TurboTax. Most of us have done our taxes at some point in our lives, so just filling out your information on a website. We typically start the process with a soft credit pull. That way it doesn't impact someone's score at all. We're getting a full credit report, but it's not hitting their score, which can be a fear for someone that maybe has had credit challenges in the past. So we do a soft credit pull, and we're able to fully qualify somebody off that. You can securely upload documents, and we try to make it as pain-free as possible. It's really fairly simple, and usually for most borrowers, we're able to tell if they qualify within an hour or so of application. We just have to calculate income, pull credit, and just trying to do the math to see what they qualify for, what loan programs will work for them.
And I have a lot of people asking me about interest rates, and they feel like the sky is falling with the interest rates going up. How important are interest rates to mortgages, and is this a terrible time to get a mortgage?
Okay. I would say interest rates are important, but they're not the only thing. Right now, we're dealing with a couple of big things in real estate. Interest rates are at 20-year highs, 23-year highs actually, and then inventory is at historic lows. So there's not a lot of houses out there. There's more buyers than houses available, and then it's just more expensive because the rates that were 3% 2 years ago are 7.5% depending on the loan program now. Some are in the sixes still. So rates have actually come down some in the last several weeks. So we're off the peaks that we hit. Rates actually hit 8%. So we're off the peak quite a bit. Really, I would say the interest rate is just part of the whole picture because if you qualify to buy the home, it's almost always a good idea to go ahead and buy it because you can always refinance later when the market is more advantageous for you to do so. Whereas as rates come down, buyers that can't qualify now at say a 7% rate but can qualify at 6% are going to flood back in the market. So there'll be even more competition for the same amount of inventory. We have such low inventory. Let's just talk specifically Middle Tennessee. We have such low inventory versus the number of new household creations that builders can't build our way out of the problem in the short term. So it's just going to be a tight inventory market for some time. So if you can qualify, I would say grit your teeth and take the higher interest rate now, and then look at refinancing later, that's what we'll be doing for folks that we've done loans for the last 18 months. Those people will be refinancing probably within the next 24 months because they have to take a higher rate, and when they come down, we'll want to put them in a better position.
Awesome. Yeah, thank you so much for joining me.
Absolutely.
Any other last thoughts?
I would just say the cost of waiting with homes going up in value, 7% appreciation, the cost of waiting is a real thing right now. So, and if we're talking specifically to first-time home buyers, we can do the math in all markets of rent versus buy, looking at historic rents and how they go up in cost, and looking at how your payment remains stable on, say, a 30-year fixed rate mortgage. And the wealth you build through appreciation and the wealth you build through amortization, which is paying your mortgage down, you cannot ever gain that back. So you're really missing out on those gains in the middle class, which is, real estate is the basis of wealth in the middle class if you're not taking advantage of buying a home.
Yeah, because right now inventory is just over 1 million homes that are available to purchase right now, and that includes under contracts, I believe. Yeah. And that's all prices. Yeah. So especially if you're a first-time home buyer, it's really a hard place to be right now.
It is.
So yeah, I mean, those supply and demand, those prices are going to keep going up unless we can build millions of houses overnight,
which doesn't happen.
Which does not happen. So,
but there are a ton of opportunities, especially for first-time home buyers, to not have to wait and save up money. They can get assistance to get in a home now, and it's a great time to do that.
Yes, I think I definitely agree with that. And yeah, thank you so much for joining me.
My pleasure.
And I'll put our contact information in the comments or in the description there. So yeah,
Excellent.
Thank you.
Thank you, Aaron.